The cyclicality of earnings is catching up with Indian stocks. Yes, it has been happening since last year when we saw towards the end of last year that earnings growth wasn't measuring up to the metrics which are needed to keep those stock prices which they were at. That is why stocks fell, because earnings metrics floundered. Well, most of India's rapid growth in company earnings, corporate earnings, by the way, in the last 3 or 4 years, they have doubled. And to that extent, Indian stock prices also have moved in that proportion, or maybe even higher, because multiples also got re-rated. But since last year, because a large part of the Indian consumer base did not partake in this growth in earnings. Most of the earnings came from premiumization, from the best corporates milking profits, and it didn't percolate to the bottom slabs of the pyramid. Well, that catching up is now a head load on earnings. It is continuing. Even fourth quarter earnings have been mixed. With this being the case, most fund managers are now guiding that the next 4 years will not be as great as the past 4 years, because they need to temper down. Investors अभी आशा में हैं कि पिछले जैसे 4 years stock prices ballooned and gave them such great earnings. The fund managers need to temper those expectations, otherwise people will be disappointed and they will sell off. Well, at this time, if actually it happens कि single digit returns हो अगले 3-4 साल stock prices में, then is the stock market a great place to be? Probably, but not with the same old hold forever, long-term investing, stick with the stock and watch it grow, not with all those old mantras. You will need new mantras to get alpha, because the base effect is too high now. With this base effect, that CAGR will not come in earnings, it will not come in stock prices. New strategies are needed. The same old mutual funds will be the laggards for the next few years. Watch out.